Don't apply for a home loan yourself if you don't know these things. If you're busy and don't fully understand the home loan process in the US, this video is for you. I'm going to explain how a mortgage broker helps you prepare your loan file correctly from the beginning and save you time. Things everyone should know about the mortgage process for first-time home buyers. According to the National Association of Realtors, most first-time home buyers today are millennials. In particular, about 71% of buyers between ages 26 and 34 are first-time home buyers. What's important is that many people don't fail because they lack money. They fail because they don't understand the mortgage process. A lot of buyers ask questions like, should I get pre-approved before looking at homes? When should I submit an offer? If my finances are not fully clear yet, should I even start house hunting? When buyers don't see the full picture, everyone gives different advice. Agents say one thing, friends say another, the internet says something else. The more they research, the more confused they become. That's exactly why a mortgage broker becomes important. A mortgage broker does more than just give you a loan number. A broker helps you understand the entire home loan process, from financial preparation, pre-approval, submitting offers, underwriting, all the way to closing. A broker also helps determine a safe borrowing amount based on your student loans, actual down payment funds, and other financial obligations. More importantly, a broker explains every step clearly. You'll understand where you are in the process, what comes next, and when you should take action. During the offer stage, the broker also works closely with your real estate agent to make sure your loan file looks strong and reliable to the seller. The biggest value is that you won't buy a home blindly. You won't submit offers before your file is ready, and you won't have to run back and forth between the bank, the agent, and endless paperwork. If you're a first-time homebuyer and want to fully understand the mortgage process before making a major financial decision, follow this channel. Why loan conditions keep appearing even after pre-qualification? Many people think that having a pre-approval, stable income, and enough down payment means the loan process will go smoothly, but that's not always true. Your loan can still be delayed or even denied if the underwriter finds unclear information or inconsistent documents. During underwriting, lenders often request additional documents called conditions. These conditions usually fall into common categories, for example, unstable income, self-employed borrowers, commission-based employees, or people earning overtime income often need to explain how their income is calculated. Another common issue is large unexplained bank deposits or gift funds that do not meet guidelines. There may also be student loans or installment debts that were not fully disclosed. An average loan file can go through multiple rounds of conditions if documents are missing, submitted incorrectly, or if the source of funds cannot be explained properly. The problem is that when borrowers receive conditions, they often don't understand exactly what the lender is trying to verify. They submit the wrong documents or incomplete information, which creates even more conditions and delays the process. This is where a mortgage broker becomes valuable. A broker helps decode the condition requests, identifies exactly what the underwriter needs to verify, and helps organize everything into one clean submission. A very common example is overtime income. A borrower may receive a pre-approval based on their current pay stubs and latest W-2 forms. But during a full underwriting review, the underwriter may discover that the overtime income only appeared consistently for 10 to 12 months. Since it doesn't show a full 2-year stable history, that income may not qualify, which can reduce the approved loan amount. If a mortgage broker is involved from the beginning, the broker can analyze the borrower's income in detail, base salary, overtime income, bonuses, allowances, and other income sources. From there, the broker can recommend a safer loan amount and a more realistic home price based on your finances. If your lender keeps asking for more documents, the issue may not be your money. It may simply be how the file was prepared and explained. Contact us if you want guidance from the beginning. The biggest mistake homebuyers make with loan deadlines. Many buyers think getting approved is the finish line. But in reality, the process is much more complicated. A lot of loan files get delayed or become more expensive simply because buyers don't manage the loan timeline and rate lock properly. On average, a home loan in the US can take around 45 to 50 days when working directly with a retail bank. When working through a mortgage broker, the process is often faster, usually around 38 to 42 days. When buyers work directly with banks, they often don't understand the full timeline. They only react when the bank asks for documents. Nobody reminds them when the rate lock is about to expire. Nobody warns them about underwriting risks ahead of time. And by the time problems appear, it may already be too late to fix them properly. The biggest risk is not just getting denied. It's missing escrow deadlines. That could mean losing the house, losing your earnest money deposit, or paying expensive rate lock extension fees ranging from hundreds to thousands of dollars. According to Freddie Mac, just a 0.25% increase in interest rates can raise monthly payments by hundreds of dollars and affect your long-term financial stability. A mortgage broker helps reduce these risks by creating a clear timeline from the beginning. The broker helps determine the right time to lock the interest rate, follows up closely with the lender and underwriter, and constantly monitors appraisal progress and legal documents. Most importantly, a broker warns you about possible delays ahead of time. For example, underwriting may take longer than expected, the appraisal may come back late, or new lender conditions could affect the closing deadline. This gives buyers and agents time to respond early instead of being surprised at the last minute. The biggest benefit is that you always know where your file stands. Wire fraud alert: protect your home purchase now. When buying a home in the US, many buyers believe that as long as they choose a lender and an escrow company, everything will be fine. But in reality, if you choose a lender or escrow company without knowing how to verify credibility, risks can come from very small details. Many buyers find lenders or escrow companies through Google Ads or word-of-mouth referrals, but they never verify whether the lender has a valid license. In the US, lenders must have an NMLS license registered through the nationwide multi-state licensing system and registry. Escrow companies must also be licensed by the state. Without proper verification, you may end up working with companies that lack experience or legal qualifications. Another common risk is receiving an attractive quote up front. Some lenders advertise very low interest rates to attract buyers, but they don't clearly explain the conditions attached. Then right before closing, you suddenly discover higher fees, changed rates, or loan terms that are different from what you originally expected. At that point, you're already close to the deadline and may not have enough time to switch lenders. There is also a much more serious risk: wire fraud. The FBI and CFPB have repeatedly warned homebuyers about this scam. Hackers can impersonate escrow companies and send fake wiring instructions by email. With just one fake email, buyers can accidentally wire tens or even hundreds of thousands of dollars to the wrong account. According to the FBI's IC3 report, wire fraud losses reached nearly $400 million in 2022 alone. A mortgage broker does not replace the lender or escrow company, but a broker helps filter risks before the transaction happens. Brokers usually work with trusted lenders and escrow companies that have already been verified. They also help you understand which loan quotes are realistic and guide you on how to transfer funds safely. Choosing your own lender and escrow company is not wrong, but without someone overseeing the bigger picture, you may be taking on unnecessary risks in one of the biggest financial decisions of your life. If you want to learn how to verify lenders and escrow companies and avoid scams during the home buying process, follow this channel or contact us before signing contracts and wiring funds. Thank you for watching, and I'll see you in the next video.
Real estate and mortgage broker Danguard, with experience in over 1,000 loan applications and real estate transactions, aims to provide you with useful and general knowledge about this field. For advice on each specific case, please contact via email or website provided below the video. Don't forget to click like and subscribe to the channel to stay updated with the latest information from Danguard.